Why aren't most QIs having this ability?
Yes, and the other point, one to that is, why hasn't my CPA told me about this, right? And so it kind of go hand in hand. I think people have their until something becomes mainstream. Generally speaking, they just focus on what they're doing, and most QI companies are just doing 1031s. You know, they're not doing brokerage, they're not doing management, they're not doing deferred sales trust, and they're just focused on that niche. Now, they may have had their attorneys look at it. I can't speak for all the individual QI companies. I'm not an attorney, so maybe they have some issue with it. I don't know. All I know is the tax attorney who's done thousands of these has had zero issues. Not one single IRS audit has failed, and thousands of closes. The largest deal was 125 million in San Diego. So which was audited, by the way. And what the IRS said was, you guys are just doing an installment sale. Now, you're being creative on how you're using this trust to make this thing work. But as far as the QI companies, those that have, I can tell you they're getting a lot more business, right? Because let's say either way, they're attracting the client because they have the option. So yeah, that would be the answer to that. And as far as the CPA part of it, most CPAs, especially even if they're real estate CPAs, they're in their own niche here. And I imagine it to like a general practitioner or even like a knee surgeon, right? If you go to a doctor, they know knee surgery and they know general practice, but they don't know brain surgery per se, right? They're going to put you to a specialist. And that's where the tax attorneys who started this, that's all they do is a deferred sales. They're a brain surgeon and they've never lost a patient. No patient has ever died, right? No patient's ever gone to jail. And it just works. And so sometimes the client needs to say, look, you've been a good CPA general practitioner, but I've got to get brain surgery here because you're not paying this $1 million or $2 or $4 million tax bill. And sometimes the CPAs don't want to say necessarily yes per se, because they're concerned that they're going to be held liable and there's no real upside for them. So some of them will say, well, I'm not sure. I understand all that. And no, you're probably not going to understand all that because you haven't done 10 of these or 5 of these or thousands of these, right? And so that's when the client has to say, okay, I'll make a decision. But by the way, it's not to say that we don't have CPAs who have said yes. We have national law firms who have said yes. In fact, we have thousands of professionals across the U.S. We've rolled this out to thousands of financial advisors, and their legal teams had to look at this before we rolled it out to them. So there's been lots of eyes and ears on it. We've already blazed the trail. So we would just say, take it slow, get to know us, introduce you to your trusted advisors. Let's all talk and let's find out what challenges they have. And most of the time they say yes, go for it. But sometimes a QI company will say no. Sometimes a CPA will say no. And then that's when the client has to make a decision.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.